Friday, April 20th, 2018, Monaco 64, home of alternative economics and contrarian views. So I'm going to look at the markets as usual this morning. I want to talk about also why I got involved in gold and how I became of a sound money proponent after buying my first coins, or you want to call it a gold bug. I'll talk about that. And I also want to talk about the market abuse I detected yesterday in the gold market. And it's nothing new. And I'll tell you what I did. I actually reported it to the FCA, the Financial Conduct Authority. And I'll tell you a little bit more about what happened yesterday after I look at the markets. So it's just before 8 a.m. Gold right now is at 1343.90, so down about $1.50. We've seen a range of 1341 to 1347. Silver 1718, down about 6. Range has been 1714 to 1728. Dow is down 7, so pretty quiet, 24,650. The S&P is down 1.5. So fairly quiet markets. NASDAQ down 12 points, 0.2%, 6,761. The pound actually continued to drop. We're at 140.65. A few days ago, we were above 143, so it has corrected down a bit. It's down 20 pips this morning at 140.65. The euro as well is from yesterday morning when I was doing the recap. We were almost around 124. We're now 123.44. Dollar is firmer against the yen, up 15 pips at 107.50. So yeah, the dollar is stabilized a little bit. What about crude oil? 68.17. So fairly steady. Why I got involved in gold? Well, for some reason, I'm not sure why. I went and bought a few Krugerrands while I was still working in the city. I think it was around 2002. I think it was just because I started reading a little bit about free markets, the Austrian school, and there's a lot of talk about gold. And my pension was kind of hit a little bit in 2000 with the stock market crash, and I thought, oh, maybe it would be good to buy a few Krugerrands. And then I bought the coins. I never bought any gold. The only gold I bought had been my wedding ring and my wife's wedding ring when we got married. So when I went to the jeweler in the city of London, who did deal in gold coins, bought the Krugerrands, it was a really amazing feeling holding a gold coin. I didn't realize it was so heavy. And then I started just looking into it and following the markets every day to see what the price did. And then I started learning about the markets, the fixing, the LBMA. Then I started noticing funny things in the price action. And then I started to realize that the bullion banks, they actually not really proponents of gold. I think they're there to control the price and to help their central banks. So yesterday, gold was doing fairly well, continued above 1350. This in the morning in London, from like when I woke up to around 10 o'clock, it was hovering between 1351 and 1354. Silver was doing really well. It had gone up to above 1730. And then all of a sudden, I see this around then all of a sudden I see this on the chart, sitting here, watching the market. And I see this move, this spike lower. And then I look at my watch and it's like just before 10:30. And then alarm bells went. Oh, what's at 10:30? Well, that's when the AM fixing in London starts from. It's not fixed at 10:30, but the process starts from 10:30. So you had this drop in gold, as you saw, from 1352 to almost 1344 in a matter of minutes, which was very unusual. So I said to myself, there must be a bullion bank out there or someone within the LBMA market making community that doesn't want gold fixed above 1350 at the AM fixing. And they've gone in, and what they do, the bullion banks and the people involved in the gold market in London, LBMA, of course, in the fixing is supposed to be the physical market. So they go into the futures, the COMEX, and the COMEX is open because it's all electronic. And I worked in these markets, so I know. They go in there and they just smash all the bids. They trigger stops, and the market goes straight down to 1344. And you can see that after that, the markets did rally a little bit above 1350, but that was later on in the day. And look where we're now. We haven't been able to stay above 1350. And why do I say this is market abuse? I think it is market abuse. Well, there is a lot of precedent. Of course, I've been following this since 2002, and I've noticed it. And it's always to the downside. It just seems to be that clients of these banks, they're bullish gold. They want to do, how can I say, strategies to make money going long, and they're always punished. You know, there's always something happening. So I said there's precedent. Well, I'll read to you the precedent. It's from the FCA, Financial Conduct Authority in the UK. And this is from 23rd of May 2014, and it says, Barclays fined £26 million for failings surrounding the London gold fixing, and former Barclays trader banned and fined for inappropriate conduct. So this happened in June 28th, 2012. And it says here, Blunkett was the director of the precious metal desk at Barclays and was responsible for pricing products linked to the price of precious metals and managing Barclays' risk exposure to those products. And it goes on to say, Plunkett was responsible for pricing and managing Barclays' risk on the digital exotic options contract. The digital that referenced the price of gold during the 3 p.m. gold fixing on 28th of June 2012. And it says if the price fixed above 1,558.96, the barrier, during 3 p.m. gold fixing on 28th of June 2012, then Barclays was required to make a payment to its customer. But if the price fixed below the barrier, Barclays would not have to make the payment. So that's what happened. And it goes on to say here, as a result, Barclays was not obligated to make the $3.9 million payment to its customer, and Plunkett's book profited by $1.75 million, excluding hedging, which was in addition to initial profit that his book received upon the sale of the digital or the option. So these banks, they get paid for writing these options to these clients, and then they screwed the client on cue just before the fixing at 10 p.m. It started earlier because the market was, as you can see, above 1570. So they had to start earlier, around 8 a.m. New York, which was around 1 p.m. London. They started selling the gold market in the futures, and it dropped and dropped, and the price was below the barrier. So yesterday, the same thing happened. Am I saying it was Barclays? No, because Barclays is not even a member anymore of the LBMA or a market maker. But there is a list on the LBMA website of all the members. Contacted Bank of England, LBMA, and they all said they were not interested. They didn't regulate the gold market. LBMA even told me I could call the City of London police, which I did, and then they said you need to call Action Fraud. I did, and then they said call the FCA, and I did. And I actually spoke to someone there for a while, and I have a case that I opened to report the market abuse, and they told me to send an email to market.abuse at fca.org.uk, and you might want to send something to them if you see abuse in the market, especially in the precious metals, and complain. I think you need to be in the UK to do it. You could be an American investor. Why not complain to them? So that's what I wanted to talk about. So if you enjoyed this video, please like, share it, subscribe to my channel. If you haven't yet, make sure you click the little bell to get notified of my new videos. And you can also follow me on Steemit and DTube or on Twitter. And I'll talk to you later. Take care. Bye.